Doing payroll for Chapter 9 now. Before we look at the two problems that we're going to look at in this video, I want to talk to you about Social Security and Medicare. Well, that's Social Security and Medicare. Okay. When you get paid, you're the employee. They take 6.2% out of your check if you're an employee for Social Security. They take 1.45% out of your check for Medicare. For employers, they have to pay, on top of what they pay you, 6.2% in Social Security. So if they take $10, let's say it's $10 out of your check, they also match another $10 in Social Security. So the math's the same, 6.2% for the employee. And on top of what you're paid, the employer has a tax on payroll of 6.2% for Social Security and 1.45 for Medicare. That's 12.4% between the employer and the employee that's going into Social Security. And for Medicare, that's 2.9%. If you add those together, 15.3%. Now, a lot of times, because we work for somebody, that's all we think about. Just, what's coming out of our check. All right. Now, our employers also pay the 6.2%. If you're self-employed, if you're self-employed, you're the employee and the employer, so you pay both 15.3%. So whether you're self-employed or working for somebody else, it's 15.3%. It's just you're more aware of it when you're self-employed because you're paying both, or you see both payments. When you're just working for somebody, you only see the 6.2 and the 1.45 coming out of your check. Oh, one more thing. Together, this is called FICA. So if you wanted to, you could go get your paycheck, and if they have it broken down between Social Security and Medicare, you can multiply 6.2% times your gross pay, and you would get what they took out for Social Security. And the same thing for Medicare. You could get what they took out of your check for Medicare. If they just have FICA there, which stands for Social Security and Medicare tax, all right, it is 1.45 plus 6.2 will be 7.65. I knew that by heart. I feel like I had to calculate that. Just multiply 7.65% times your gross pay, and you'll get what they took out for FICA. All right. A couple other things to note. Right now, FUTA is only on the first $7,000 of an employee's wages. That tax is only calculated on the first $7,000 in wages. So let's say somebody's making $84,000 a year. Well, 1 month's gross wages is $7,000. So as of February, there's no more FUTA tax being collected on that employee. But let's say there's a part-time employee and they make $500 a month. There is no point at all during the year where gross wages will be equal to or greater than $7,000. So they will continue to have a FUTA tax all throughout the year. So if you change jobs, let's say you make $10,000 on one job, and you change jobs and make 10 on another, and change jobs and make 10 on another. All three different employees, let's say they're all three different employers, all three different ones had to pay the FUTA tax because it's on the first $7,000 in wages. SUTA, that's federal, okay? and then the state is given by the state. It used to be South Carolina before the Great Recession in 2008, 2009. It was, or maybe it was 2010. I don't know when that recession ended. I don't remember anymore. Was 7,000. Now it's, I was fixing to say it's more than double. So it's either 14 or 15,000. And that amount varies depending on certain factors. And I'm getting into more detail than we need to know. So the food tax is pretty well the same unless the state owes the money, a lot of money to the federal government for paying unemployment. And where they basically borrowed the money from the federal government to pay unemployment, and they had to pay it back, and they didn't. That as long as they're in good standing and not behind on stuff like that, FUTA is pretty well just a very, very low amount. And this sort of just depends on each individual company. We'd have to be given to. All right, one more thing. So there's two entries: record payroll, and then we record the matching expenses. Remember I told you that the employer has a matching expense? Well, that would be an example of that is here. These two are matching. And then the other thing is FUTA and SUTA are paid by the employer. FUTA always, all 50 states. SUTA, most anywhere near the state of, most any states near the state of South Carolina, or employer only. We could look it up and verify, but if you want to, I encourage you to do it. I believe like Alaska, California, Hawaii, I believe both the employer and the employee pay some of the SUTA. I could be wrong, but there's some states for sure that pay both. But unless something's happened and changed in the last 6-12 months, SUTA for like North Carolina, Georgia, Tennessee, Kentucky, South Carolina, North Carolina, they're only employer. And that would be the standard matching journal entry would be FICA, taxes, your Social Security and Medicare, and then SUTA FUTA. So let's look at the payroll entry. Before I do it, I just say pretend it's your paycheck. And I'm just going to make a mention as we do this. Pretend that's just one person's pay. I know that's a lot of money, but it's helpful if you do that. That's gross pay, and that's net pay. All right. If you look at it that way, then it looks more reasonable, like you're used to seeing on your pay advice. If you've looked at one, I hope you have. Please do. So that'd be gross pay, and then this would be all the stuff that's subtracted out. I know I don't have the parentheses lined up to get your net pay. So it'd be gross minus equals net pay. And if you look at it that way on these payroll entries, they work out so much better. Okay. So let's read this problem. Employees earn $35,000 in sales salaries. That is salaries expense debit $35,000. Nothing new there. We've been debiting salaries expense the entire course already, basically. So withheld from the salaries is FICA, Social Security at 6.2. So 6.2% times 35,000 is 2170. FICA is 1.45%. 1.45% times 35,000 is 507.50. Then 6,500 for federal income tax, that'll be given to you. 772 of medical insurance deductions, that's the employee's portion of maybe health insurance or dental insurance, something like that. 120 in union dues, that comes out of their checks, they're paying it. No employee earned more than $7,000. We'll talk about that in a second. So what I would do is if I was filling this out, this journal entry out, right, I would have had 35,000 filled out, all these numbers filled out, and this one's blank. And I would have done exactly the way I told you this was, working as if it was a payroll advice, pay advice. 35,000 minus 2170 minus 507.50 minus 6,500 minus 772.50 and then minus 120, and you would get 24,930.00. I would also go ahead and add up this column again to make sure it totals and equals $35,000. That will conclude how you do a payroll entry. There's really nothing more complicated. You could be paying 100 employees The numbers would be bigger, but the journal entry is essentially the same. All right. They might have a little bit more deductions for this or that, maybe vision or disability or something, but Christmas club, something. I don't know. I'm just thinking of things that you could see in the real world. Whatever. Employee savings. All right. But besides these deductions, these are the basic ones that you'll see mostly. All right. Maybe not employee dues. Maybe not see that unless they have a union, right? Okay. But I think you get the idea. It's pretty straightforward. Now the matching, I'm going to show you a pretty cool trick. No, it's different. No, I'm sorry. This is a different problem. All right. So Schmoll has 10 companies. That's very important to know. Each of whom earns $2,000 per month and has been employed since January 1st. FICA, Social Security taxes are 6.2 of the first $118,500 paid to each employee, and FICA taxes are 1.45% of gross pay. FUTA taxes are 0.6%. SUTA is 5.4%. Remember I told you SUTA would be given? I would say that's probably the highest amount for SUTA. I know the companies I've been affiliated with, we had no layoffs for a long time, and our SUTA taxes were wicked low. And this one says that both the SUTA is on the first 7,000, just like FUTA is. Now, the law has, unless the law has changed, and I would have been aware of it. And for us in this book, it's FUTA is the first 7,000 in wages. And so is the state in this case. So FUTA is always the first 7,000 in wages, and unless they tell you otherwise, it's 0.6%. Be very, very careful with 0.6%. Let me just reiterate that. 0.6% is 0.006. Okay? And 0.006 is $42. Okay? Let me just do this. So 7,000 times 0.006, that's 0.6%, equals $42. All right, so that's the most any employer would pay for FUTA in a year for any employee. All right, prepare the March journal entry to record the payroll tax expense. Payroll tax expense. So when I work these, I do not write a number there. I leave that blank. I write down payroll tax expense, and I flip over and I do FICA, Social Security, FICA, Medicare. So I take, where's the gross pay? All right, so it didn't give it to us. They said each one of them makes $2,000 times 10 is $20,000. And then you just take the 20,000 and multiply that times 0.062, and you get 1240. Which is what they did here. I combined. I said 20. They did the math here like that. Times 6.2% is 1240. They did the same thing. 10 times 2,000 times 1.45 is 290. Now, I already have the $42 here. Let me show you what you could do. You could just say 10 times 42. And you would get 420, and that would be wrong. And the reason that would be wrong, is because each employee earned 2,000, not 7,000. A lot of people try to take a shortcut because they worked a problem like that or something similar, and it doesn't work out for them. So always go back to the basics. 10 employees got paid $2,000, which is 20,000 times 0.006 is 120. Same thing for Medicare. I'm sorry, for SUTA. 10 times 2,000 times 5.4% is 1,080. Then what you want to do is you want to add up all four of these numbers, and 120 plus 1,080 plus 290 plus 1,240 equals 2,730. So keep in mind, when you do payroll, you record payroll, and then you also record the matching payroll entry On top of that, this is the tax on top of payroll. So this is the tax for this